My name is Brother Watkins, and this is the first instructional video for QuickBooks. And in it, I'm going to go through the transactions that are part of your practice number 1. You're going to learn to do these at home, at the lab, in the library, and when you feel confident that you can do them and get to the same right numbers that we have, then you're going to go and do it in the testing center. So to get started, we're going to open QuickBooks. QuickBooks is a program that's developed over the years to become pretty much the standard small to medium business software. It's used by everybody pretty much. You're going to encounter it. And you're going to find that the businesses where the owners know how to use QuickBooks are much more efficient at capturing their accounting information, and they can make better business decisions. So we feel that it's necessary for you as a business student to know how to use the software. So we're going to get started by creating a company. You're going to name it after yourself so that I don't get 20 uploads with the same name, Island Surfboards or Island Bicycles. So we use your name for the company name. And we're going to use a general service-based business. And we're going to make our business a sole proprietorship, meaning it has one owner. So when you go to open QuickBooks, make sure that you're opening the QuickBooks Premier Edition Accounting Software 2012. Don't open the File Manager or you won't be able to get this. Now, if it comes up with a screen that says Open a New Company, click on Open a New Company. But most of the computer stations in the lab and the library are set up to erase everything you do when you log off. So this screen will come up first. This is the Express Start screen. Start, and it'll ask you those 3 questions. So we're going to start with your name for the company name, and we're going to be a general service-based business. We're going to sell internet connections, and we're going to be a sole proprietorship. Don't worry about the tax ID. Don't worry about addresses and phone numbers and a lot of the other information that you would typically use. We're doing this in an academic setting, so all we really want are the names and the numbers. But be careful of the date. The program wants to always use the current date. That's a safety feature. But we're going to be doing from February 3rd to February 28th. We're going to use different dates. And so you're going to have a lot of little error messages pop up, and QuickBooks is going to try to correct you. You have to be sure that you're committing these on the right date, or your transactions won't be in order and you won't get the right numbers. Meaning you'll have to, if you're in the testing center and screw it up, you'll have to go back and do it again. We only want to do it once. So watch the dates. So I'm going to continue. Again, I don't need all of this information. So I'm going to create the company file. And you can see this little box here. See if I can move. It's very difficult for the computer to open a QuickBooks file because they're so huge. And so your computer will likely say not responding, and it will take a while. It could take a minute or 2 in some cases. So I'm going to pause this while it's working. Okay, when you're done, you're going to see this screen here. This is the Start Working screen. We'll click on it, and QuickBooks will enter. Actually, it'll try to take over your desktop. Now, I can't video the entire desktop, so we'll have to work around that. This quick start, don't need it, so close it. And what you've got, I wish I could resize this here. Let me see if I can. Good. Okay, I can resize it for you. Okay. So let's take a look here at what you're seeing. This is a kind of a representation of the business cycle. We make sales, we collect money, and everything goes into the bank. That's the most important icon for you to know to begin, because before we do anything, remember we're trying to book these transactions. Before I do anything, I have to have money in the bank. And so what we're going to do in this first practice is explore putting money in the bank with a loan. The Bank of Laie will loan you $25,000 on terms of 5% compounded monthly and amortized for 4 years. Don't worry about the 5% and the amortization. Banks will send you bills every month, and you'll know exactly how much to pay. You don't have to worry about entering that information. What you do need to do is put that $25,000 in the bank and make sure that it is being counted as a long-term liability because it's a loan. Typically, when you start a small business, you go to your bank with a business plan and say, hey, if you loan me this much money, here's how I plan to turn it into more money and pay you lots of fees in the meantime. Okay, so first thing you do in any QuickBooks assignment, all 4 practices and the test, once you get to this point, click on the bank. It will say you need to have a valid bank account. Create one now, yes. It's going to be the Bank of Laie. I might give you a different name for the bank, that's fine. Look at this Add New Account window, it's very important. Okay, here is a list of the different kinds of accounting accounts that you can open. Each one of these lines has a different part of your financial statements. So when it opens a bank account, remember you only do that once. You will never do this again. Save and close. It's done. I've got a bank account. Now here, I'm going to deposit to this bank account on February 3rd. Let's make sure we change that. But I'm going to get it not from my own money. We'll do that in another practice. This time we're going to get it from the bank. So I'm going to type Bank of Laie. Now, a word about QuickBooks data entry. When you see that little arrow right there, that means that you have a list of various entities. Vendors are other businesses that you do business with. Customers are businesses or people you sell things to. Employees work for you. And other, the only other I know of is you. So we're going to add a vendor, and that vendor is going to be Bank of Laie. You say, wait a minute, we already added Bank of Laie. But you didn't. You made a bank account in the name of the Bank of Laie. You did not add them as a vendor. This is going to be on the final. You have to keep those separate. The Bank of Laie is going to loan you money. Now, opening balance. This line is for entering information into QuickBooks for a company that already exists. We're not going to worry about that. So you don't have to worry about this date right here because we're starting fresh. If you're confused and want to make sure you do it, doesn't hurt. You can set that to February 3rd. Won't hurt anything. But just remember, you don't have to do that. All we need is the name. Okay, now I've got the name, Bank of Laie. What kind of account is that Bank of Laie loan? Well, it's going to be a long-term liability. Okay, read these directions very carefully. Create a new account. It is a long-term liability. Name it Note Payable Bank of Laie. Okay, so how do I do that? I go into the account. I add a new account because it's not in the list. I have to add it. Now, this screen confuses a lot of people. This is just a helper screen. This does not make the selection for you. It helps you find the right selection. So, for example, if I hit Loan here, it will take me to some kind of liability account. Continue. There's the liability. Okay? Let me cancel that and show you that you can create a new account, totally bypass this screen by just clicking here and saying long-term liability. Okay? These selections help you find the right account, but the one that really matters is this box up here at the top, account type, long-term liability. The name is Note Payable Bank of Laie. Now I know you haven't all finished 201, but there's 2 kinds of notes. There's current liability, which means you're going to pay it off in a year or in the business cycle. And there's a long-term liability, which means it's going to be longer than a year. That's why I told you it was going to be a 4-year note. So all I need is the name. All this other information that you would typically do, we don't have to worry about it. So now I know who I got it from. I know which of my accounting accounts I put that in. The memo is just a brief description so that I can see on my accounting journal what this transaction was about. So I'll say initial funding loan. Of course, they're just going to put cash into my account in the amount of $25,000. So here's your first transaction. Person, the account, description, and the money. Let's double check our date, February 3rd, okay, and we'll save and close. Now that beep, that's going to annoy a lot of people in the testing center. I should probably show you how to turn that off. Go to Edit, okay. Oh, in fact, we've got something missing up here that we're going to need. If you go here, here's the step we skipped. We have to select preferences and turn on purchase orders and inventory. Okay, a lot of times the default that it presents to you is incomplete. So let's do that now. Edit, Preferences. Now here's how you get rid of the beep. It comes up on General, and see that beep when recording a transaction? I'll just turn that off right there. Then I'll look for Items and Inventory. Save the other ones. Go to Company and click the box. That's all you do. Everything's fine, just click that box. I hit OK. It will want to close everything. Let it close everything. And then you can hit the Home button again and it will all come back, but this time you'll see purchase orders and receiving inventory and entering bills. It's complicated this little screen a bit, and depending on your business, this screen can get very complicated. But all we did was we added purchase orders and we got rid of the beep. Okay, so we have put money in the bank. Let's click on the bank. Anytime you want to see what you have done in QuickBooks, you can just go to the screen where you entered the information and hit Previous. There it is. And up to a certain point, I can make changes to that. So if you just made, let's say for example, you saved it and you forgot to do the date, and you just thought, oh, I have to fix the date. What you would do is you would just go back to Record Deposits, go Previous, click the date, save it. It will say, do you want to change it? And you'll say yes. Okay, so now on the transaction here, I'm going to show you how to check your work. At this point, February 3rd, your balance sheet will have two items. You'll have cash in the bank and a liability of $25,000. Remember, in accounting, everything is always in balance. Assets equal liabilities plus owner's equity. Liabilities are debt financing of your business, and owner's equity is your financing of the business. Either you kept the business's earnings inside the business, or you gave the business some of your money. So let's look at a balance sheet. Go to Reports, Company and Financial, Balance Sheet Standard. Always use standard statements. Do not use the detail or the summary. Use standards. Okay, so Balance Sheet Standard or Profit and Loss Standard, which is your income statement. So if we go to the balance sheet, now we have to tell it what time we're looking at, because again, it always wants to come up with January 4th, which is today. So I'm going to change that to February 3rd and hit refresh. It's that hitting refresh that a lot of people forget. Alright, here's my balance sheet. I did make $25,000 deposit to the bank, and I do have a $25,000 liability. So you've done it correctly if you see this on your balance sheet. The object at the end of the exercise is to have financial statements, such as the balance sheet, that have the correct numbers on them. So just remember, that's what you're working on. Alright, so let's go back. You go and rent an office at the Laie Professional Building. The security deposit of $1,500 and first month's rent of $1,050 are paid to Hawaii Properties via check number 1 from your Bank of Laie account. Let's do it. We have money in the bank, so we can write a check. There's two ways to put names into the list. I showed you the one where you hit the arrow and you hit Add New. There's a quick add procedure where I can say, what was it again? Hawaii Properties, Inc. And then I hit Enter, and it says it's not in the name list. Do we want to add it? I hit Quick Add. It says, is this a vendor, customer, or employee? Remember, a vendor is a business that you do business with, so it is a vendor. Alright, so now we have our check there. Now we want to put check 1. It gets important later on when you're doing bank reconciliations that you have the right numbers on your checks. Learn how to do it now. Unclick the To Be Printed box and put a 1 up there. That'll start your checks. We're still on the 3rd of February. That's good. So now we're going to figure out how to enter the transaction. So the first part was the actual first month's rent. Well, we go down our list of accounts, and there's rent expense. I don't know if you can see that. Let me see if I pull that down. Hopefully you can see it now. Rent expense. Push this back up. The rent expense was $1,050. So I enter the amount, $1,050, and I say first month's rent. Down here, what I'm doing is I'm doing my accounting. Okay, I can have more than one accounting account on a check. The second thing that check's going to have is a security deposit. So I open it up. You won't find security deposits here. Your only asset accounts are furniture and depreciation. So you're going to have to add a new asset account. It's going to be an other asset. Okay, just remember that. I think I tell you on there. Hint. Oh, I didn't tell you. Okay, so just remember, it's an other asset. Other asset, continue. Select from examples. Make sure that this is the box that determines. That last screen was just a helper screen. So make sure that says other asset. There it is. When I hit the select from examples, it says security deposits asset. So I hit OK, and it entered it for me. So I save and close. So now I have the right account. I'm going to put $1,500 in that account, and that's my security deposit. Remember, you get your security deposit back, so it's an asset in your business, but it's not a liquid asset, meaning you can't run low one month and go to your landlord and say, hey, I need some of that $1,500 because I have to pay a bill. The landlord will say, no. As long as you're in my building, you keep that $1,500 there. So we're going to call it an other asset, and together these two entries in my accounting are going to take $2,550 out of my bank account. Let's put a memo on the check. So first month's rent and security deposit. Always a good idea. So a check can go to two different accounts. That's what this transaction is showing you. Okay, now, you don't have to do this every time, but you're still new to it, so I'll show you the balance sheet again. Company and financial, balance sheet, and we're going to change this to today. A balance sheet is a snapshot as of a given date. Click refresh. So now we can see, hey, we spent some money, but now we've got a security deposit, and then the difference here was an expense, which means so far for the year we only have expenses. We don't have any revenues. Income is revenue minus expense, so of course we have a negative income. But we're in balance. Everything's good. That's what QuickBooks does. QuickBooks handles the debits and credits. It knows where to put your entries so that your accounting is accurate. So we've written our check. Everything looks good. And again, if you screwed up the check, you click on your checkbook, you hit previous, and you fix whatever went wrong. If it's really bad, you right click on it and you just delete the whole check. Just get rid of it and start over. So now let's do our next transaction. The office needs furniture. You've had a busy day here. So February 3rd, you're going to go to town and buy office furniture and office supplies from Honolulu Business Supply. Okay, furniture and equipment is an asset. So are office supplies. So you're going to create a current asset account called office supplies inventory because you're going to use them during the year. They're current asset. The furniture and equipment account already exists. So let's go back, write a check. Remember I showed you that quick add? It's automatically check number 2. Honolulu Business Supply. Enter. It's a vendor, so we're done there. So now we're going to buy furniture. So it's furniture and equipment. And I think it was $1,700. Let's see what it was. $1,700. And this is office furniture purchase. The next one is going to be our supplies. Now, don't use office supplies here because that's an expense account. It's a different kind of account. So we're gonna have to add a new account, and I told you it was a current asset. Okay, so I'm going to continue here and just say office supplies inventory. Okay, I haven't used them yet. When I use them, that's an expense. So at the end of the year, I'll count up how much I have left, and whatever the difference is, I'll enter an expense. But you don't have to worry about that now. All you have to worry about is getting them on your books. So we're going to put 300 office supplies. See, 300 of supplies. Good. So purchase of office supplies, and then on the check I'll just say furniture and office supplies. All right. The memo line is not graded. It's just so that you can identify what this transaction is when you're looking at your statements. So $2,000 on the 3rd, save and close. All right, on February 6th, you've made a deal with the local cable company to supply a fiber optic line directly to their main hub so that you can sell high-speed internet to cable customers. I'm going to write 2 checks on the 6th of February. First one is going to be Trans-Pacific as your first payment. All right, let's do that. Let's write a check. It's number 3. It's on February 6th. It's to Trans-Pacific. They're going to be quickly added as a vendor, and it's going to be for $1,500 as my first semi-annual payment. So I have to get the internet before I sell it. This is going to be computer and internet expense, $1,500, first 6 months internet service. Okay, I'll just say here, first 6 months internet service. That's everything. The check is good, date's right, amount's right, payee's right. Save and close. Now here's one of those warnings here. We'll just ignore that. Check number 4 goes to Island Tech for running the fiber line from the Trans-Pacific office to your cable hub. So this is going to be Island Tech. Okay, it's going to be a computer and internet expense again, and it's going to be to run fiber optic line for internet, and they're going to get $2,000. Okay, this is accounting. You're identifying business transactions and recording them. To run fiber optic line for internet. Alright, done. So now we're going to do a purchase order. A purchase order is not an accounting transaction. It's an invitation, if you were, like an invitation to a party. You're going to send an invitation to this company and say, I would like to purchase these from you at your stated terms. And if they agree, they'll send you the items with a bill for those terms. If they disagree, they'll send back your purchase order and say, we don't agree with your purchase order. We're not going to fill it. So in order to do purchase orders, at this point, if you don't see that purchase order icon, then you have to go Edit, Preferences, Items and Inventory, Company Preferences, and click this box. Hopefully you did it with us before, so now we're going to go Purchase Order. And our vendor is going to be California Data Inc. We can use the same quick add procedure. And it automatically knows it's a vendor because that's a vendor field. We're not going to worry about where it's shipping to or the addresses or anything like that. But we are going to worry about the date. It's the 10th. So we'll change the date to the 10th. Purchase order number 1. Now, what are we going to purchase? That is where the item comes in. And an item is described on an item screen. Inventory part. These are all the different things that you can describe. We're going to describe a piece of inventory called a router. Okay, if it had a number or something, we'd put that in. So I think it was a wireless router. Wireless router. Okay, it's going to cost us $100. We're going to sell it to our customers for $200. There's a must enter on all inventory items. You have to put an income account, and if you look through all of your accounts, there's only one, sales revenue. It's not called sales revenue, but it's sales. It could be merchandise sales, or it just could be sales. Because we did a general services-based business, it didn't tell us merchandise, it just says sales. Down here is a little way to remind yourself to reorder when you get low. So this date here is not important to change. But if you're being super careful and you want to put it February 10th, it's not going to hurt anything. So February 10th, router. A common problem is after you've gone through the work of defining the item, you forget to tell it how many of them. Okay, what's the quantity? We want 20 of them. So we're going to hit 20. It's going to automatically figure out that we owe them $2,000. We'll just say this is our first purchase of routers, and we'll save and close. And again, with all of the QuickBooks stuff, if I go back, I can fix it if I made a problem. Now remember what you're doing. These are screens that are entering information, but what QuickBooks really does is much more than that. Okay, QuickBooks will allow you, let's just preview this. It creates this business document for you. There's the purchase order. You can design it, make it fancy. So don't forget when you're entering all these numbers, what you're really doing is entering actual information that will be an invoice or a receipt or any other a bill of lading, bill of materials. All the standard kinds of paper that used to run a business is all computerized now. Okay, so we no longer need to see the print dialog. Everything looks good, our date's good. Again, a word about the date. If you don't have the purchase order on the right date, then when you go to pick up your inventory, it's not going to be ready for you. So we're told that on the 17th, we're going to receive the routers with a bill for $2,000. So I go to receive inventory with a bill. But if I leave the date wrong, then the inventory won't be ready. Fortunately, it remembered 210. So now the vendor on the bill, California Data Inc. Now, it remembers, here's where you start to save time with QuickBooks. It remembered that we had a purchase order for those routers. So we hit yes, click the box, and it will bring in the information about those routers. 20 of them, cost $100, total of $2,000. Now let's look at our transaction. The terms on the bill are due on receipt. Terms are right here. We're going to learn more about terms later, but for now, due on receipt. And we'll say first order of routers. And what the bill does is it will pop up on our screen on the due date and say pay me. So I'll hit save and close. But we are told, we've changed the terms, sure, we'll have them show up next time. We're told that we're going to pay this bill on the same day. So once you've received your inventory with a bill, or if you receive without a bill, you do a receipt and then you enter the bill here. We're going to pay the bill by moving down to the pay bill screen. You can see that all you have to do is check a box. We want to assign a check number. The date is still the 10th. Or sorry, we receive on the 17th. Okay, so let's go back. Let's go to our bills, enter bills. Now, even though we received inventory with a bill, if we want to correct a bill, you have to go to the enter bill. And I'll go back, and here's a great example of how to fix something. It's the 17th now. The bill is due on the 17th. Okay, so I'll save and close. It'll say correct it, yes. Now I'll pay it. It's the 17th now on the bill. Okay, 17th, and we'll assign a check number. And what's our check number now? Our check number is 5. So we'll pay the bill. It will say 5 for the check number, and it's done. And once we've paid the bill, we have inventory. Okay, we have those routers in our inventory, and if we ever want to know what's going on in our inventory, we can go to our report screen, inventory, look at a summary as of, remember today's the 17th, refresh, and there's 20 wireless routers in our inventory. We'll do more complicated inventory in later practices. Alright, so we've paid the bill. This is an example of something that gets students in trouble. Receiving the router with the bill opens one screen, paying the bill takes another screen. So make sure that you always complete the whole transaction, and it's really easy to make that date problem. You just saw me make that date mistake. So always check your box with a pencil or do something to make sure you do it right. Okay, on the 19th, we're going to do a sale. Today you signed up your first customer, Kaneohe Pawn Shop, and you're going to give them a router and internet service for a month. We're going to prepare a receipt and deposit funds with the bank. Alright, sales come in two forms. It's either a credit sale, which we'll do in a later exercise, or it's a cash sale. If it's a cash sale and you've gotten your payment, you create a receipt. And let's see, this was Kaneohe Pawn Shop. It's in a customer field, so when I enter, it's going to say quick add. It's got that. The date was the 19th, so we'll change the date. The item that you sold them was a router. Give them one router. But we also are going to sell them services. So we have to define that. So let's add a new item. Service. Remember, we're a general service-based business, so it figured that out. 1 month internet. That's what we're selling to people. So 1 month internet. And we're going to sell them a month at $500. And the account is going to be sales. Remember, you always have that account. So that's how to enter a service. Now we can say quantity 1. And they're going to pay us cash. And there's $700. So let's give them a thank you for your business. This is our first cash sale. And now we have revenue in our business. And we can start to offset some of those expenses. So save and close. That's done. That's our sales receipt. So whenever you have a cash sale, you use the receipt. We'll go back. And apparently I want you to practice this. And it says they paid you cash. We did that. We prepared a receipt. But did we deposit the funds with the bank? No. So all you have to do to make the deposit is click on the bank. And it will say, by the way, here's some undeposited funds. If you end your transactions and your balance sheet says undeposited funds, that's an error that will send you back to do it again. So again, make sure you get the whole transaction. All you have to do is hit OK, does it all, save and close. That was easy. So let's do that again now. 21st, 2 customers, both the same kind of sale, wall-and-wall and a Wahoo Properties. So sales receipt, it's the 21st. We'll do wall-and-wall, quick add, customer, and we're going to give them an internet service 1 month, and we're going to give them a router, 1 router. Thank you for your business. They're going to pay cash, second cash sale, save and close. Done. We have a second sale on that same day to Oahu. Well, actually, Properties Inc. Okay, so let's hit return, quick add. They're in. They're going to get the same thing. 1 router 1. So we had 2 sales on the same day. Cash sales. Thank you for your business. Third cash sale. Okay, and remember what you're doing when you do a sales receipt is you're actually printing out a document that can be designed in any way, but here it is. Let me move this over. I mean, you're used to seeing your little receipt at the register at the supermarket or something, but if you're a business that's doing business over the internet or something, you're going to send them a receipt. Looks something like that. Okay, we'll close the print dialog. And when you make your sales, at the end of the day, you take your cash to the bank. Never leave your cash on the premises, and never forget to get it in the bank where it earns interest. So I click on the bank and it says, hey, I've got two separate pieces of cash that were recorded coming in. I hit OK. They're deposited. Alright, now we get our loan bill. It shows that our first payment is 57573. So our check is for 57573. But loans consist of two different items. There's interest and principal. And the bank always gets its interest first. Whatever's left over pays principal, which reduces your loan balance. So let's write that check. This again is on the final, and for some reason it's difficult for students. So learn it well here. February 28th, check 6. So February 28th, check 6. Remember, we don't have to enter Bank of Laie. They're already a vendor in our system. So the first thing we do is pay the interest expense. There it is. And let's look at our 104.16. First month's interest on loan. And then whatever's left over after the interest is paid reduces the loan. And you'll recall that we did the loan as a long-term note payable. So 471.57. First month's principal on loan, and on the check we'll just say first month's loan payment. And that's how to make a loan payment. It's on the final, and I'm always surprised by how many students struggle with this one. Learn it now, and you'll never have trouble with it again. So it's 28th, 575, close. And that's your last transaction. So once you've finished booking the transactions, we're going to prepare PDF files of the balance sheet, income statement, and accounting journal. This is very important. I only accept PDF files. So let's go back. Let's do the balance sheet first. Reports, company and financial, balance sheet standard. We're going to set the date for February 28th. Refresh. There's my balance sheet. It's done. Okay, I'm going to go File, Save as PDF, and I'm going to name it JBW Balance Sheet. And I'm going to make sure it goes to my desktop so that I can see it, because you're going to want to upload this later. Now let's look at your balance sheet. Okay, this is the point where you decide whether you did your work right. So if you see that your balance of assets is $21,674.27, you're good to go. I was just checking against my own, so that was good. So we have the balance sheet done. Now let's do the income statement. Profit and loss. Always use the standard. Okay, profit and loss is different. It's not as of a date, it's as of a range of dates. So start at the beginning of the year and either say all, okay, which would get the whole year. That's a shortcut. Or you could have from January 1st to February 28th and refresh. Either way works fine. Okay, the object is to get that number 285416. Good. So there's my two primary statements. Now the general journal. Each time you book a transaction, you're booking it to the general journal, and I can't grade you unless I can see that. So you're the accountant journal. Okay, I'll leave that on the screen for a minute. You need to know how to do an accounting journal. So let's go back here. Reports, accountant, journal. Okay, the journal, same thing. I want to get all of my transactions. Refresh. Now here, I'm going to ask you to print this a different way. It makes it so much easier to grade. Print, but don't use the regular printer. use a PDF printer. So in the testing center, it's called QuickPDF. You can download one anywhere you're at, whatever one, but make it a landscape, meaning that it'll turn the paper on its wide side so that I can see the numbers together with the transactions. It's really hard to grade if you don't do that. So I said print. Okay, it'll come up with another screen saying, what do you want to call it? When it gets around to it, here we go. And I'll just say JBW Journal. Save on the desktop. Alright, so let's look at my desktop now. I've got a journal and a balance sheet. Oh, got to make sure I get the profit loss. So I'll go save as PDF, JBW profit loss, save. Okay, done. Okay, once you've finished booking everything and you've prepared your PDF files and they're saved on your desktop, close your QuickBooks, raise your hand, get the password from the TA at the testing center, and then you're going to take a quiz. Now, regardless of whether you have the quiz answers correct, the quiz is just for you. If you get the quiz answers correct, thumbs up, you know you're done. But if it's regardless, you've got to upload them so I can grade them. So let's assume you've taken the quiz. Now what we're going to do is we're going to go and take a look at the upload. So if I go, let me turn this thing here to student so that we can see it the way you see it. Alright. So this is how you are now looking at QuickBooks, or sorry, at Accounting 231. All the grayed out things are grayed out because you have to complete the items above before you can move down. Because of that, I have given you a place at the bottom where QuickBooks will always be available to you. So you're done, you click on QuickBooks Practice 1, and then you submit your assignment. We're going to choose our file to upload. You can choose any one of the three. Let's go to our desktop, and there's my balance sheet. So I'll click on balance sheet. Down at the bottom here, you can't see it. Let me see if I can bring it up for you. There we go. I'm going to hit open. Okay, submit assignment. It's submitting. Okay, now resubmit. Now this time I'm going to submit another file. I'm going to do, actually, let's see, add another file. Oh, so I could have done that way. Okay, so let's go back and let's do two at once. So I'll choose the journal, and then I'll choose the profit and loss, and I'll submit. Okay, so now there we go. We've got the journal, the profit loss, the one that you did before. I will see it. So if I leave student view, okay, and then I go to my speed grader, and I come up to test student, you see this? There's the one I did before. I didn't lose it. It was there. So even though you don't see it, don't panic and redo it again. Once you've submitted it, I can see it, and I can see when you submitted it. I can grade it, and you're done. And I just want you to take a look here. When you use that print PDF and do it in landscape mode, I think really happy thoughts about you, because I can see it all on the same page. Otherwise, it comes up like this, and it cuts off the numbers, and I have to print them out and paste them together, and it's really annoying. But this is your first practice. Get in there. QuickBooks is not that difficult. It's not rocket science. This isn't statistics, okay? Just learn how to enter those transactions, learn how to read my descriptions of the transactions, get into the testing center, do the practice, and you're done. Remember, online students have a different deadline than the lecture students. So be careful and look at Canvas for your deadlines, and then get it done. Get it done early. Start on your pivot tables.